Some surprising economic data out just moments ago. Import prices rose and housing starts were stronger than expected. Well, joining me now to talk about what these numbers mean is former Fed governor and professor of economics at the University of Chicago Booth School of Business, Randall Kroszner. Randy, thank you for joining us here on In the Loop. What do you make of these numbers? Do they give us any good sort of leading indication of where the economy is headed?
Well, the housing market has been in the doldrums for quite some time. These numbers are broadly consistent with, unfortunately, still relatively weak housing. Typically what happens in the recession recovery is that housing goes down, but as interest rates come down, that helps to boost it back up. Housing has still been very, very weak, so it's not going to be a driver of recovery.
And were you surprised at all about import prices? I mean, at this stage, we've seen gas prices much, much lower than they were at the beginning of the year. But is this any indication of where we might be headed as well?
I wouldn't overdo any 1 month's numbers on these prices. I think we're likely to see inflation, the core inflation, go up a little bit over the next few months as the previous rises in energy prices work through. But headline numbers are likely to come down because energy prices are gradually coming down.
Let me ask you a question. We've been talking a lot about economists weighing in on the likelihood of a double-dip recession. Mixed views out there. What's your impression at this stage? There's so much liquidity in this system. Is it likely that we're going to head into another recession, or do you think we're just going to have a very stagnant economy for a much longer period of time?
Well, I think right now the data aren't clear, and I think that's why reasonable people disagree about the probability of recession. The GDP numbers we had were very, very weak, very little growth in the first half of the year, and the revisions going back over the last few years suggested that we had a deeper recession and weaker recovery. So we're not as in strong a position as we thought we were. But the jobs numbers, while weak, were still positive. Retail sales numbers were more positive than had been expected. So not all the pieces are fitting together for recession. I think it's certainly possible, but I don't think the data suggests that we're there yet.
What's the likelihood of the growth overseas? We saw much weaker numbers, of course, from the Eurozone region. Yeah. What's the likelihood of that impacting our economy at this point? Are the two intertwined?
For sure, and I think particularly through the mechanism of a financial crisis in Europe having an impact on the financial markets and financials in the U.S., the volatility that we've seen over the last few weeks was largely driven by uncertainty about whether there might be some sort of default or disorderly restructuring in Europe. And banks in Europe hold a lot of their sovereign debt. If those banks start going down, they fund themselves in the U.S. markets. That disrupts the U.S. markets and can disrupt the funding for U.S. operations of banks as well as operations of non-financial firms.
I've got one last question for you, Randy. As a former Fed governor, I have to get you to chime in on Rick Perry's comments related to Ben Bernanke, saying what he's been doing in terms of liquidity is basically a treasonous.
That strikes me as going a little far. I think what the chairman has done with quantitative easing 2 was very effectively avoid a Japan-style deflation from taking hold. Last year, inflation and inflation expectations were coming down very strongly, and we're getting dangerously close to a Japan-style situation. We've avoided that, and I think, as the FOMC put out in their most recent statement, they're considering various options. They haven't actually pulled the trigger on any of them, but that's good risk management. With the risks in Europe, with other risks that are out there, that's what a central bank's supposed to be doing, is monitoring those risks.
All right. Thanks so much for joining us here on In the Loop this morning, Randy. We do appreciate your time. That was Randall Kroszner, economics professor at the University of Chicago.